India has the third largest startup ecosystem in the world, with 2 to 3 startups being born almost every day. However, 90% of these young enterprises fail. Although there are several reasons for this, the lack of funding remains a major cause of concern. According to a PwC report, in the first half of 2023, the Indian startup ecosystem received a total funding of $3.8 billion through 298 deals. This is the lowest amount of funding in the last 4 years and almost 36% lower than the funding received in the second half of 2022, which was $5.9 billion. So we spoke to Amit Nawka, PwC India Partner, to understand the reason behind this extended funding winter in the Indian startup ecosystem.
There are a bunch of things happening in the startup ecosystem which is not the best for the ecosystem. For example, the governance issues which is coming to light. Investors being very picky on the kind of companies that they want to choose. Hence, they are looking at companies which are turning profitable in the next 12 months or are already profitable. And hence the whole investment has slowed down.
In 2020, when the COVID-19 pandemic hit the world, one of the things that drastically changed was consumer behavior. Online became the new normal, be it for food, education, work, or recreation. This resulted in several sectors like EdTech grab massive funding from investors. But that bubble did not last for long.
The extent of the funding winter, as they call it, many people were expecting it to improve by around this time, but I guess it's going to be pushed out by another quarter or two.
Sectorally, fintech, SaaS, edtech, consumer tech, and D2C constitute more than 75% of the total funding.
The one that saw the sharpest fall, it would be edtech, because we saw a lot of funding going into the edtech ecosystem during COVID. But if you look at some of the smaller sectors in terms of the pie, gaming, if you look at food tech, they have actually increased their funding in the first half of this year. The companies that are showing good numbers in terms of profits are attracting investments.
City-wise, Bangalore, NCR, and Mumbai remained key startup regions in India, with around 83% of the total startup funding activity in H1 CY23. However, a decline in funding activity was noted across all cities in the first half of 2023 except Chennai, which witnessed higher funding in the SaaS space. Why?
I think more than 75% of all funded companies in Chennai are in SaaS. If it's not 75%, then it's a very significant majority, is in the SaaS segment. And the reason is that, you have found a lot of scaled SaaS players, come out of Chennai. So what happens is that, when there's a large scale player, the CXOs of those organizations come out and they start their own company. And they develop and they grow in their own ecosystem.
Similar pattern can be observed in other cities like Bangalore with most consumer tech companies and Mumbai with most fintechs. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, head to our website business-standard.com.